My name is Cairo. I'm the founder of Fesbury Capital and I am the director of the BDS Citigroup Signals program. It's just a quick video today just to talk about how to manage your risk properly so that you can make the most of the signals that you're given. Now, the best online calculator for managing risk is this one provided by alpari.co.uk. So the web address is just here, alpari.co.uk/research tools/calculators. Now it's got a few different calculators on the page. The only one you're going to need is this one up at the top of the page. It's the risk percentage calculator. So what you want to do in here, the signals are given, and the signal will be an entry price with a stop loss and a take profit target. So as soon as you get the signal in, you want to calculate the amount of pips that are between the stop loss and the entry price. That's all you need to worry about, is how big is the gap between the stop loss and the entry price. Now, it's not rare for us to have a stop loss of around 150 pips, so that's what I'm going to use for this example. So what you do, you come in here, obviously choose whether you're, US or pound. So my account is obviously Great British Pounds. So let's say this is a signal for Great British Pound Aussie dollar. So we look through this list here, obviously select that. So like I said, in this example, we're using 150 pips stop loss, so that goes in here. And then here, we just put our account value. So how much have you got in your account at the moment? So let's say for this example that we've got £10,000. And so the last thing to do is put in the percentage risk. Now, it's recommended that for retail traders, you use a risk somewhere between 1% and 3%. There are a lot of people that even go lower than that and go 0.5 to 1%, but me personally, I do like to use 3%. You get the right mix of account growth and safety. So in here, that's where you type it, 3%, and you shouldn't really be going over that. Over 3%, it begins to get risky, and if you sustain a few losses in a row, it will harm your account. I personally recommend if you're new, or if you work full time, for example, and you might get in or out of trades a bit late. I personally recommend not going above about 2% of your account. So yeah, what this means, it just means on my £10,000 account, the maximum I can lose, so if the trade touches the stop loss, I will lose 3% of my account. So overall, the maximum I can lose on this trade is £300. So I press calculate, and this is the lot size you'll need to put into your MT4 broker. So in order for you to manage the risk properly and risk 3% of your account, you need to use 0.38 lots. And it's as simple as that. I mean, I would recommend using the calculator because for different pairs, you require a different lot size, and you see it changed from 0.38 to 0.36 just because I changed to Euro Canadian dollar. So I would definitely recommend using this, and every single time you come in, make sure you've got your stop loss pip count correct. And yeah, that will keep you on the right path using the right amount of risk, and you should remain overall profitable. Just a quick one for anyone that's not on MT4 and uses a broker where they can just enter their pounds per pip. Simply the way to do that, I mean, if you look at this again, we'll use £10,000 account balance. So 3% of £10,000 is obviously £300. And so all you would need to do is put in £300, which is your 3%, the maximum that you want to lose. And then what you're going to do is simply divide that by however much your stop loss is. So in this example, we've got 150 pips stop loss. So we would do that, which obviously equals 2. So that would mean that you use £2 per pip in this example. If the stop loss was, say, a shorter one, so 80 pips, for example, we use the same amount of risk, but we divide it by 80 because there's an 80 pip stop loss. So on this example, you'd use £3.75 per pip, and that will keep you consistent. Yeah, it's the best way to trade, and it will keep you consistent and profitable overall. Thank you.